Okay, good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, June 25th. Michael Boutros with you on the wires. Guys, we just got the release of durable goods orders coming in at 15.8%. That tops the 10% expectation. A little bit of a delayed read here on GDP, waiting for that print. Initial jobs claims coming in slightly higher than expected. So we're just waiting to see what those GDP numbers are. But good morning to everyone in the room. Hey, Jay, Michael, Pete, Steve, Ziad. Great to see everyone here. Hey, DJ, how's it going? So on the menu for today, as we wait for this print, lots to cover. We have dollar yen, dollar Swiss, and Kiwi CAD on high demand. We started looking at it here in the webinars. Setup's looking still pretty good. Weekly opening range is holding. We'll take a look at those Kiwi CAD figures. Aussie, Kiwi, dollar peso, gold, dollar index, obviously euro, sterling, and dollar CAD. Any other questions or trade setups? As always, feel free to throw them on the message board. Here's third read on first quarter GDP coming in right in line with expectations at -5%. So no change there. Okay, let's jump right into the charts. Here is the dollar index. So recovery taking it a little bit further. Here's what it looks like. First of all, I want to show you the weekly chart just to show you and highlight how critical this key range is that we've continued to highlight since the beginning, really since the beginning of the month. It's the objective yearly open 96.50 support, 618 retracement of the objective yearly range 97.83. That's on the upside. We've been there for the last 2 weeks. That's the range that needs to break to give us the next guidance. These long wicks would suggest at least the risk for a larger recovery remains. But that's the focus. A weekly close out of this key zone is what we're looking for as momentum continues to grind right around 50. Daily chart looks a little different, really highlights this resistance zone even more. Again, there's the 618 of the yearly range. It's also the broader 618 of the decline from the highs we made in 2017. So again, a nice confluence Fibonacci zone there. Add to that the median line for the pitchfork we've been following from 2017, 2018. It's right there. Basic trend line off of last month's highs. Also right there. I mean, it's loaded. So we're going to know if the dollar's got more pump in it or not pretty close. That all is determined by 97.84, 97.87. That's the zone that needs to breach. Monthly open resistance converges on that March low right here, 98.27, 98.30. That would be your breakout zone. So right now, the focus is on this reaction here. If we get up there, whether we get exhaustion or not, the risk still remains to the downside while below this, but that's the threshold. That's how critical that region is. If it gives out, man, we have to a larger recovery in the dollar. That being said, here's what it looks like on the intraday chart, and here's the approach to that key pivot as we get closer to the start of U.S. trade. Here's what it looked like earlier in the week. There's the break of support. We were looking for 38.2, key support at 96.44, 96.49. There's the first target. There's the second target. We grounded out right there. Larger recovery. And now we're right back within the confines of the weekly opening range. So simple 2-day stretch. And here we are in Thursday, still holding that 2-day stretch. So you have a very clear cut weekly opening range right below critical resistance. The onus is on a breach above this to invalidate the short side. That said, this advances at risk heading into 97.87. So no change to any of those levels from the Sunday update. We're going to continue to track this one very closely, but man, the host of US dollar majors, guys, heading into Thursday open here. You still have an opening range intact on Aussie. You still got an opening range intact on Kiwi. You still got an opening range intact on sterling. You've got a whole bunch of trades that are still just ranging, but those ranges are in critical areas. So you want to watch here for DXY below 97.87. And on the flip side, euro, here's what euro looked like into the start of the week. We were trading into the resistance range of this descending formation, really clear. Got the breakout. You're looking for 1325 on the upside. It's the 618 retracement. If this holds, a downside break below 1167 is still what you need. Here's what it looks like now on euro. So again, take it from the top down. Here's euro on the weekly charts as we head towards the close of the week. Critical support, 1167, 1187, still the same zone. Again, the 618 of the 2017 advance, 618 of this year's range. Swing highs from last year, we're still there. We're still there. So you got that same key zone, no surprise. The opposite trade here on euro, almost exactly the same as DXY. Here's what it looks like on the daily chart. Okay, so you start off the week at support, that key zone that we just talked about. It launched. We were looking at this downslope. We said, watch out. If that breaks, we're still looking for 1325. There's 1325. It failed ahead of the high day close, ahead of the 38.2 retracement of the decline. And then here was yesterday's trade. Looking for support at 1239. Didn't get it. Right back at major key support here. So we're going to scratch this to clean this up. This is your monthly open. This is initial key support. We're looking for a reaction here today. Here's the intraday. And again, here's what it'll look like start off the week. So there's that breach. You got it. It ran into that 618. That kind of held things up. A little bit of false break scenario there. We checked it back as resistance again. Shifts the focus back to the lower parallel. Man, that didn't hold. And then we broke back below the December high. And here we are right back at key support. Now, be mindful of the fact that the weekly open is also in this key zone now. Not only is it the weekly open, it's also the weekly opening range lows. There's so much lined up here. 1167 to 1187. It's a 20 pip zone. Look for reaction today. If that breaks, 1143 and 1115 should be close by. Okay, it should be a pretty quick run. But the immediate short side's at risk as you head into this zone here into the US trade session. So be mindful of possible downside exhaustion here. Initial resistance, I put a soft target at 1249, 1239, 1240 still, but I'd require a break back above 1265 to put us back on the long side. Looks like the efficacy of this slope is basically rearing its face here. Now, there could be, and I don't want to get too complicated on this yet, there could be a new slope in here. I was looking at a couple of different scenarios where we could give some color to this decline, as short as it may be, just at least to get validation of the breakout. So if we were to scratch this, for example, whoop, wrong one, right, and work with something like that, it basically suggests, you want to see like that high give out at 1280s to get this thing going. But it certainly puts this on a little bit more of a clear gradient. Long story short, I don't want to stress this slope yet. I just wanted to show it to you because we'll probably be moving to something like this if we do break 1167. I'm looking for reaction here right now into the US trade. This is the level to watch. If 1239 holds today, do you think we have a new low below 1172, last week's low? Yeah. Took me a minute to think about that, man. Yeah. If you see failure or it pumps into 1249, even 1260 and fails, your first inherent target is back into that 1167, 1187 target. But you would, that scenario, you would think you'd at least get a tag of something like this. Yep. All right, I'm gonna leave that there just for decoration. But there's the 618 extension from the drop. There's the 100. So even if it is corrective, the buckle below this would certainly be problematic. It would open up 1090s on the downside. Does that make sense? All right. Guys, can I just get a sound confirmation? Okay, Iman says yes, thanks. All right, cool. I thought it was okay. Hi, Mike. What about the pitchfork starting on the 4 hour or on the fourth on the euro for the 2 hour? A pitchfork starting from the fourth. So what? This is the one that we were working with. You talking about something like this? Just using that high? The fourth and ninth and the 10th. Yeah, that's what we were using. Um, the high is the fifth. Well, that's interesting. Yeah, DJ. Um, the interior levels are a little messy, but I would be willing to look at that. The thing I look for is the gradient along the levels that we are focused on being more critical, namely the zone we just talked about for 10 minutes, the 38.2, which is where I want to see resistance. You got that 75% line somewhere in that zone, specifically heading out into the close of trade tomorrow. And the June open, the objective monthly open support, which converges on the lower parallel. I actually am not too opposed to working with that slope. Um, Same levels are highlighted, same levels are yeah, thanks for that. Nice moves, DJ. Not bad, mate. Sometimes takes a little bit of a tweak, huh? Many ways to skin a cat. I like that, DJ. Yeah, right on. Either way, lateral levels that we're looking at are kind of the same, so don't change those. Here's what it looks like. As far as this, we're just simply resetting that 100%. So the new high that we registered, if we take that new extension, it pushes that 100 down to basically like 110.90s. So anything sub 1167, the risk really is for a larger dump back into the monthly open. That said, this is support, this is support, this is support into the US Open. Let's see what happens. All right. That is number 2, euro. So I guess let's just keep with that same setup from earlier in the week. Let's just hit sterling. There's not much going on there. So the weekly opening range here is intact, just above the weekly open. Sterling, same exact deal. Weekly opening range intact. I don't like that we didn't really break this. You could take this new slope, use the new highs, which actually does give you a better gradient on the support side, but it's just an ugly trade in my opinion. There's just not much clarity here. I think you're gonna get a little bit more compression. You are sitting at key support. That's the only and single most important thing. So here's what sterling looked like earlier in the week. We were looking at this advance, looking at that ups, that downslope resistance, that 38.2, 25.16. We wanted to see a reaction there. We got this, whatever the heck that is. Then a pretty strong reversal, which in my opinion was the risk for a pullback. So here's the pullback. Could you get back into that key support zone with what's going on and dollar kind of taking, its stride here, giving a little bit of a lift? Yeah, sure. Is there a trade for me? If you didn't take the short from the rejection of 25, I don't think there's anything for us here. If we get deeper into 22 or 23.20s down here, it's kind of an instinctual area to look for another kind of pivot because it's the monthly open, it's the 100% extension, It's the 618 retracement. It's my favorite Fibonacci confluence zones. It's also the objective weekly open. So you got the weekly open, monthly open, 618, 100%, and it's the objective weekly opening range lows. It's all about this zone. It's the same setup, guys, on the euro. It's the same setup. So don't stack up too many positions in the same slot on both of these, but you're basically looking for a pivot off of key support with the weekly opening range intact. I think euro out of these two is actually a better cut right now because you're at support, where sterling is trading right slap in the middle of the weekly opening range. There's no positioning here, guys. If you're not already positioned in sterling, you got to wait this one out. But just to take a step back on the broader picture, here we are. If that upslope is in play, downside should be pretty limited today. Now, on the opposite side of that argument, you have an outside day reversal yesterday off of the weekly high. It's typically a bearish development. So there's so many mixed signals. You got key support, monthly open, fibs up the wazoo, just lower. You know, even if the slope breaks, that's still the threshold you need to get from just a lateral sense to get the move going. The outside reversal is kind of ominous. Be careful here. Let's move these down here. This is key support. And just to put it all together on the weekly chart, here's what the sterling looks like on that. There's not much to get excited about here, but just to show you, it came off of key resistance. See if this support holds. Questions on sterling? All right, that is number 3. And the last one from that report on the 22nd was dollar CAD. Here's what Loonie looks like. So this one took quite a ride this week. All right, so we started off the week saying we're at major resistance. Check it out. Huge fib confluence again, 136 into 136. 47, a little bit bigger of a zone here, but man, was it critical. You got an outside day reversal off that early in the week, okay, on Monday, which shifted the focus lower, right? Gave us a near-term short bias. We needed to close below 34.33. Okay, this zone right here, the March high, the 2017 open, to really get this thing going, okay? You got the break. It dropped lower. Then boy, did it hold support. Here's dollar CAD. First, on the daily chart, okay, here's the drop the subsequent day. Kind of dropped below the range lows, but it failed on a reversal candle. Here's yesterday's break of downtrend resistance, but we still noted, watch this zone, okay? 36.47, 36.02 is the key zone of resistance that we were highlighting. We're trading below that now. Watch today's close. It's sort of like euro sitting at support. If this holds above this, 36.47 and closes, yeah, you have to allot a larger recovery. That said, you're at resistance right now. Here's what it looks like on the intraday. And here's those levels as they compare to earlier in the week. You got that break. Here's the turn. Didn't quite get that and move into, again, my favorite fib confluence, 100 off the high, 618 off the low. This is now void. That high has been taken out, so that 100 goes. 618 still there, so we'll leave that for some color. If this is a legit break of this 36.10 zone, so this is the 618 of the broader advance off the lows you made in January. This is the yearly range. This is 100 off the high. Nice pivot in price It's been straddling it for the last couple of days. If this breakout is legit, well, if the weekly opening range really did break here, we should be looking for 36.85. Next upside, 37.75. That's just the objective monthly open. It's a full round trip. One other thing you'd want to compare. If we do make it through this high, look where that 100 comes in. Oh, well, forget the 618. We'll leave that as a soft target right there. But look where the 100 comes in. Right, the April opening range lows, just above that 38.2, a key region we've been watching anyway. So look, this whole dollar rally, guys, I'm not on board with it across the board. I do think there's some opportunities where you need to watch them very closely, but it's all about these major pivots that we've made, the breaks of the opening ranges, the breaks and the head into these support monthly opens for the euro, sterling, things to pay attention to. All right, so that is dollar CAD, and the last one from that update. Any questions here? Trade balance figures on the second, so you don't have anything till next month on this one. Pretty clear. All right. Let me hit last night's update real quick, and then we'll go back to this update from the 23rd. Dollar yen, just want to highlight what's going on right now with some of these moves. Look, the weekly opening range looks like it's breaking here. We highlighted this zone yesterday to the upside, but again, you're not really getting much push behind it yet. Here's the breach. Here's the first target at 618 retracement, 107.46. The monthly open is just higher. So again, this is where we are now. That's the breakout zone. The monthly open, last week's high, nice pivot in price. You have slope there at this point too. So again, on an objective basis, if this is a breach of the objective weekly opening range, you should be looking for that Thursday, Friday high, 107.46, 107.65, the first two levels to really pay attention to on the upside. If that gives, then we're talking about a large return in price. If that doesn't, or if you see exhaustion, that might actually be a decent entry. Just take a step back. Here's where dollar yen is. The critical region that we're in is still so important. Here's the breakdown that we saw again in the early part of the month. We checked monthly open resistance that kept the focus lower. This was the key support zone that we were looking for. We got it. Here's the rebound. As long as we hold below the monthly open, you're still in downslope resistance. Okay, that's 107.66. That's the zone. If we're gonna fail, that's where you'd want to see failure again. Above 108, you're risking a larger test of the yearly open again. Gary says the abomination, as usual, just enough to stop me and Jamie. I mean, there's a reason that it's earned its name well. Here's the intraday. Well, let me take a step back. Here's the weekly too. Okay, that's 618 at 106.31. I warned you guys early in the week. That's sort of for me, pivot. You've got the swing lows from here from earlier in May. There was worth a little bit of a pump. Long story, I'm still bearish below 106, 108.60s, the yearly open. That's 618 of this drop. But yeah, I still think you could see some possible upside here. It all depends on whether this opening range break is real or not. If we had the U.S. session, 9:30 comes on, markets are actually pressing, and you see that kick above 107.46, I think you stick with that. Near-term support at the weekly open at this point. Well, initial support at this slope. Okay, very simple, but from a lateral level, weekly open support here. If we get below 106.65, I think you look for a resumptive trade lower. Not much exciting stuff on dollar. I guess I should take that back. There is exciting stuff on dollar yen, but as far as new positioning, watch this region 107.46 and 107.65 on the upside. Dollar yen weekly opening range breakout. Okay, we covered that. That's number 5. Ugh, dollar Swiss, number 6. Also one for me that's kind of not as exciting as I would want it to see. Yesterday we highlighted that we were coming right into up downslope resistance, and we're still there. So recall this region right here. I think I quoted you guys at 95 yesterday, which is where the slope was. We're there now. Just above that's the weekly open resistance at 95.15. That's what I noted. That's really where the breakout needs to happen to get this thing going. So here's 95. We maxed out at 95.10, 95.09. Again, if we fail here, you have to continue to look lower. But for me, if this breakout is legit, we've been watching this slope off the highs from last month. This slope is legit. Yeah, I think you look for a stretch into 95.42, 95.55. Again, that's the breakout zone. Major pivot in price. So I don't really have much to say on this. One more example, one more instance of another opening range intact. Sterling, Aussie, Euro, Kiwi, and here's Swissy. That Monday, Tuesday stretch is still in play. Okay, switch it up a little bit. Kiwi CAD. Here's Kiwi CAD. Interesting setup, but I think it's super clean across the board on a relative basis of where you're trading as it pertains to trend. Here's Kiwi CAD on the weekly chart. So I think someone here in the room brought it up a couple of weeks ago. We were just approaching this 89 level, or 88 level rather. It looks pretty important. 87.97 is the 618 retracement of the decline off 2019. You also have the objective yearly range highs, that swing high that you made in January. And you can see that 75% line's been pretty spot on. So here it is yet again. We pumped back into it, momentum holding 60. Like opening range high. I mean, this is resistance, right? This is resistance if you're going to get it. And for the last 3 weeks, it's served as such, right? So what's the trade from here? Well, this is pretty critical on a closed basis. You're seeing momentum hold 60. Here's the daily chart. The last couple of days, okay, here's the monthly open. You ratchet it up. Look at what's been going on essentially since the 10th, right? Here's the weekly open. You gap lower into the weekly open, but then you fall right back into the range. So if you take this on a closed basis, you're not even going to see that. You're not even going to see that, right? So it's all about this zone right here. It's all about this zone right here. Objective yearly open, 87.36. It's just the objective level we opened the year. Confluence resistance at 87.97, 87.99. We're calling it 88. Look for a break of this zone with the long side at bias while below. Divergence into the highs, price action higher high, higher high, higher high, lower high, lower high. So what does this tell us? Mike, do I just jump into a short against the high and hope for the best? No. The daily chart's clearly showing us that market is range bound below a critical area of resistance. You're getting divergence into that high, so it's telling you that the long bias is vulnerable at risk into this resistance zone. You look for near term some sort of exhaustion or at least some sort of break of uptrend support. You haven't gotten that yet. Here's what it looks like on the intraday chart. And again, here's what it looked like last night. By the way, that weekly open marker was wrong. I apologize. That was from the previous week. The weekly open was here. I think that was pretty obvious, but it's right here. So here's your weekly open. Set a high, set a low. We're still trading in that range. It's the same range as last week's opening range. It's just waiting to burst. Waiting to burst. So a topside pop above 88, you're looking for a stretch into 89. It's a nice 100 pip stretch, the 100% extension. You've got a little bit of a pivot below there right at 88.90, but you get the picture. The upper parallels there, looks pretty sweet. If you break below the 2020 open, break below the range lows for the week, you don't have to necessarily look for the open of the week, but necessarily this right here, 87.13, 87 handle, you're looking for soft target 87.10, but a basic 38.2 shows you 86.40. And then that pivot at 86. Pretty critical. So the setup is just clean. The only problem with it is that you got no momentum. There's just no Momo on the trade. And you look for that to kick phase soon here. But with that range set, I think you'll get a clear-cut break. And when you do, we'll have that directional bias. Till then, that long is at risk while below this key region. So no change to any of those levels. Any questions on Kiwi CAD? I know it's an exotic we haven't covered, at least on paper, in a while, but in the webinar it's been pretty popular and the levels look clean. So we'll continue to track that one. All right, that is number 7. And now we get into the juicy stuff. So here's all the com block: Aussie dollar, Kiwi dollar, dollar peso, and gold. First, let's kick it off with Aussie. Here's what the Australian dollar looks like. So rinse, wash, repeat. I'm not quite sure how to approach this one from these levels. So here's Aussie on the weekly chart. The breach above 67.33 was pretty big for us. That was last year's low week close. Major pivot in price this year. You had slope resistance just higher. You broke above that. This was absolutely critical. And we talked about 70 to 70.42 for some time. That's the 2019 open and this year's objective yearly open. Major pivots in price dating back to 2018. We got a turn there. So the turn bounced off of downslope, former resistance turn support. And now you're seeing price just in consolidation right here. So it's not the most attractive trade from the broader stance. You're at the upper end of the range for the year, true, but you've also broken downslope resistance. So Aussie on the daily chart looks like this. We've been following this ascending channel formation off the lows from April, parallel off that high from that calendar month. Pretty much governed the highs here. You got a one single daily close above, but caught it pretty well. Here's that rebound on the pullback. The February highs, we were like, all right, let's see if we can make it through the high day close. If we get through there, then we're looking for resumption. Couldn't get it through the high day close. Pulled back. Week opened again. Failure at the high day close. Pull back. So look, I don't want to get faked out on this one. Weakness below 67.74, I think you get a bigger dump. If you break above the high day close, you have to close above 69.61, but that would be the resumptive trade. Till then, range is the name of the game. Here's what it looks like on the intraday. Weekly opening range is intact here. Here's your weekly open, 2-day stretch, still holding that level, right? The targets look pretty clean. It's just, again, can we get some momentum? Here's what it looked like into the start of the week, or actually this was on the 23rd, excuse me. We were heading right on to Friday, last week's high rather. It wasn't anything special, just that 69.76 level. We literally turned 2 pips ahead of it. Move lower, buckled back below 68.98, basically the 69 handle. 68.58 is support still. You need to close below 68 to get this thing, at least a break of uptrend support. Right here. Keep in mind, again, broadly speaking, we're constructive Aussie. I love this trade longer term. Near term, though, on the back of that stretch, it's been pretty hairy. And if we do break the weekly opening range low, yeah, I'd be looking for that extension. The 100 of that drop would expose 66.90, so just below 67. So that's the risk if weekly open support gives out. But that said, broad terms, you're still trading in this channel formation off the lows. Keep that in mind. Any questions on Aussie? Kiwi dollar, I have ditto. I literally wrote ditto on there. So you're at, I have also that the slope is dead. I don't know why I wrote that. Oh, that's right, this thing. Yeah, so the upslope that we were following looks like it's dead. All right, so here's what the setup looked like on Kiwi earlier in the week. This pitchfork looked like it was offering pretty decent guidance. It highlighted the 75% line at that 786 retracement. We never made it there. And in fact, when we broke back below the median line, it looked pretty good for a test of, excuse me, the 2018 low, which is what I wanted to hold as support. What the heck is that? So look, I don't know if this is, an opportunity for this slope to be adjusted. I don't know if we want to kind of scratch it all together. I was looking at something like this, but it's a big assumption that this low actually registered. It's a big assumption, right? But something that you might want to consider. Long story short, I just don't have the clarity on this one. For me, this is a weekly opening range, plain and simple. You can put some color to it and try to see if we can get some guidance here, but I'm thinking more consolidation type of play here before the breakout either finally covers that uncovered close, or you see that move back towards slope support. And by this, again, guys, I'm doing a lot of assumptive analysis here, but just want to show you how I'll be thinking through this. If we do break that low, that 100 goes in that 236 pretty nicely right there. 6320, 6329. So we'll see. Questions on Kiwi. Every single major is trading within the Monday, Tuesday range still. So keep that in mind. All right, last two here. Dollar peso has been pretty clean. The move that we saw yesterday seems that it's a clean breakout of basic slope resistance. But it really doesn't matter which high that you're using here. If you look at the high from April, it's really tight, and the break happened even earlier. But you get the picture. Near term downslope resistance break to the upside. Weekly opening range break with this move right here. It looks like it's teetering here. So immediately into the US trade session, yeah, I do think you risk a little bit of a setback. Look for support back at the weekly open. That 618 still, you want to drop that now. Support back at the weekly open, followed by basic gradient. Want to see that hold if this has more upside to go. So like here, 23, the 38.2 retracement and the April low, 100%. This is the next major zone of resistance. Right there. It's not a bad setup. And even with the opening range break kind of giving us divergence in moment, there's a lot to be cautious here with the opening range break, but it still puts me on a constructive path well above the weekly open, to be honest with you. At least for a near-term bump higher. I want to see reaction here. Let me push that there. Do you use Elliott wave, and if so, what time frame? I saw 5 waves up in peso. Gary, I do. Well, let me take a step back. I don't consider myself an Elliottician by any means or any stretch of the imagination. Jamie used to be huge with Elliott. I use it very rudimentary. Gary, I'm looking for 5-wave patterns. I'm looking for 3-wave patterns. That's it. I'm not trying to get too wrapped up in the weeds trying to label it. And that's the move. That's the problem everyone falls into, or not everyone. A lot of retail traders fall into with Elliott. They spend so much time trying to label this is wave 2 of 3 of this and that they lose grip of the broader market moves and sentiment and all that other stuff that's going on. So for me, Elliott pops out. I see a clear 3-wave pattern. Great, giving me indication of what direction the trend is. If I see a clear 5-wave pattern, awesome, even better. Now with the trend, right? But it's not going to necessarily refute or spark a trade. For me, it's just an added piece of evidence. If I like the trade and there's an Elliott wave count there to back it up, great. Maybe a little bit more conviction, maybe a little bit more leverage on that trade. If not, if there's an Elliott wave that counters it, maybe I'll go quarter leverage. So I use it as gauge of confidence, not necessarily as an idea per se for trade. So Gary, sorry to sidetrack there, but what time frame do you use? Again, it's relative, Gary. Don't stress the time frame, stress price action. Okay. You can have Elliott, you can identify wave patterns on weekly charts, man. You can identify wave patterns on daily, on a 2-hour chart, hour chart. So it really depends on the magnitude of trend that you're looking at. I don't want to narrow you down to one time frame, but focus on the price action per se, more so than time. Questions on peso. This is a really popular trade. Again, I keep on saying that, but daily FX traffic on this is like ridiculous. Yeah, there's really not much. So there's that slope. Here's peso on the yeah, here's peso on the weekly charts. There's that purple slope. You got resistance, breakthrough, acceleration. Might govern the long side near term, or at least cause a little bit of a kickback. But keep in mind, forget this. Keep in mind, this is the objective monthly opening range highs. So one thing I would add is just this. And one other thing, guys, bear with me. I just want to see if there's any merit. Might be worth paying attention to. Might be worth paying attention to. The highlights the 38.2, so just north of the monthly opening range highs. I'd still pay attention to this zone as key zone of resistance, but as an indication of slope, just to give you some idea on time, a modified pitchfork might be a decent gradient to follow here for now. All right, and last but not least, any other questions on peso before we move on? Man, the ATR is there, the range is there. It gives you some play if you got the patience for it. Gold. So what do we do with gold? That was 8, that was 9, that was 10. Here's number 11. Here's let's take a full top-down approach here. So it's at a critical juncture. I've been saying this, I feel like months now. We broke higher. We cleared the monthly opening range. We cleared the weekly opening range. We cleared everything. We cleared the yearly highs. Lateral level of resistance 1733. We only closed 1 week above that. Do you remember back here on this advance? And here we are. Last week we closed the second week above it. Here's the continuation. The only thing I want to highlight, I feel like I'm a boy cried wolf with resistance at gold. I keep calling resistance at gold, but we've tagged it so many times. The regular objective swing high from May still converges on slope. Watch the weekly close. Northbound is 1765. I think this thing has plenty of room to go higher. Southbound of 1765 tomorrow. You still got that ongoing divergence in momentum. You're still holding slope resistance. Daily chart looks like this. 2020 high, as noted per the high that we made back in May, was right here. Obviously, we have had a new yearly high, but just goes to show you where we are on trend. Here's the daily chart. We were in this ascending pitchfork formation for quite some time. This correction was very short-lived, 100 off the high, exactly 2 equal legs, caught the low. So again, Gary, as per your question, is Elliott. I mean, that was one that kind of screamed out at us, right? 2 equal legs, 3-wave pattern, looks pretty good. You look for a resumptive move. Well, here's the breakout. First level, second level, that's the major high. There's plenty of room if we break this, guys. But this is some room for hesitation. Here's the intraday. So above 1745, I like it. Bullish invalidation 1731. That's the high day close. It's also the June objective open, not Mike Boutros' opinion, fact. So above this region, I'm constructive. But from here, you're just testing uptrend resistance. This might be a raised ceiling, a turn right ahead of resistance on the uptrend. You know, usually can be an exhaustive trade. Even if you get back into 1745, 1744, still looks good. Bullish inval is at 1731. Next upside target is going to be that 2012 high at 1795. Questions on gold? Not too shabby. Yep. No change in any of those levels from earlier in the week. Okay, well, that is everything on my list. If there are no other questions, we will go ahead and wrap it up here, except for Michael wants to look at Euro. Oh, yeah, Aussie Key and Euro Oz. Aussie Kiwi, you're sparking my interest. Yeah, I looked at this earlier in the week. That high, that April high held. It came a little early. It converges, I mean, it converges on slow basically today, but came a little early on this one. Look, for Aussie Kiwi, at this point, I'm expecting more of a range-bound trade just because of the relative performance of where Aussie is and where Kiwi is. But look at the daily chart. Look at the daily chart. Here's the pitchfork off the lows from this year and last year, or I guess August, right? Here's a 75% line, resistance, resistance, and boy, was it on a closed basis. This thing was ridiculous. Dune, boom. On the pullback, we actually did tag that lower parallel intra-week, or intraday rather. And here we are failing at monthly open resistance. So to be quite frank, Mike, I'm expecting more chop sideways. The broader trend, in my humble opinion, is constructive, but on the back of this advance, and you can argue this is 5 waves too, I fear, or my concern would be for a deeper cut first before the resumptive move higher. This might have been it. I don't know. I haven't done enough analysis on this to actually like say with conviction that I think that the correction off the high was done. So you can work with either one of these slopes. The basic slope off the support is all, I mean, they're all converging in the same region. Here's your weekly open, which is going to be obvious support at this point. We've been watching 106.66. Okay, so this is sort of near term where you would expect to see some support. Yeah, I mean, for this one, again, expect more sideways action. I'm looking for a bottoming, so either a breach of downslope resistance or a new low. One of the two. Yeah, so like we haven't even basically scratched the basic 38.2 of the yearly ranges. Meanwhile, some of these trades are like 6.18 of the yearly range or more. Oops. So yeah, I'd be more inclined, Mike, to look for a deeper cut and then resumptive the long trade. But if you breach, the monthly open, if you breach the April highs, I think you look for a stretch towards 108 and 108.30. Does that help? This is a quick gunshot approach. Your other question was Euro Oz. Oh yeah, there's nothing for me here. Nothing for me here. This is just range contraction all day long. I mean, you can do something with that if you want, but until that breaks, I'm not touching it. Real tight opening range, and also, Mike, a lot of the time you gotta kind of knowing where to look is just as important as knowing where to trade. This is a pretty tight range, and it's been contracting for 3 weeks. Uh, you could play inside this, sure. If you want to intraday trade, go for it. I mean, we wouldn't be looking for. I'd be looking for support at 63 or 62 50s rather. I wouldn't wait for the lows there, but um, until that range breaks, I'm not really interested. Here's the daily chart. Looks like it's pretty ugly. Here's the weekly chart. But not anything I'm writing home about anytime soon. So hope that helps. He says, thank you. You're more than welcome. PSPX, where's my head? I don't know. Let me write these down real quick. Aussie Kiwi SPX. Here's Spoos. I was debating putting an update on this for you guys yesterday because I was really wanted to kind of give you a heads up about one thing. This breakdown, if it's legit, could be a bigger move that a lot of people weren't anticipating. So here's the daily chart. So yesterday did break upslope support on a close basis for the first time, but we closed right above or right at the monthly open. So like, come on, man. That's not a break. That's not a hold of support. What do you do with that? I'm inclined to look lower still, but I feel like this thing's got to rip out some people first. Got to find a near-term rally. Oh my goodness, it was a fake break. Everyone's starting to rally, and then all of a sudden, just think about what's the thing that would screw as many people as possible. Look at this. People on this, I was me included. We were breaking down in support. Oh my goodness, this thing is breaking upslope support. It's all over. Boop. We ended up the day above the monthly open. So if this is a break of the monthly open for the first time again since that move, a close below the monthly open, then we should be looking for 2970s, 2984. You know what I mean? Pete, here's what it looks like on the intraday. And here's what it looked like. Let me see when's the last update we had on SPX here. Right here. So yeah, I mean, here's the daily chart. Same thing. There's that. We're trading right there right now. We buckled below it, and that's now resistance. On the intraday chart, we didn't have this downslope yet. So we've moved on from this. It did spike January low. We just missed ahead of that. Yeah, it's same levels. Same levels. So this consolidation, we just kicked out to here, and we're just simply consolidating right above the June open. That broke. And as long as that holds resistance, like I said, the risk is for that drop near 2980, 2972. Now, a couple of things to note. You're you're getting some divergence into the lows, into slope support. So heading into the US trade session, yeah, if you get a pop back above this, look for a rally. Bearish invalidation now, I'm dropping to 31.14. right there. Near-term resistance, ideal scenario, it fails at 3080s or so, like right here. Next downside move, right into this key zone, just below the 30 handle. So that's what I'm looking at with SPX. Pete, I'd be cautious for a near-term rebound just off account of the lows that we're at, divergence, slope support. You know, it's funny, every time the market moves here, guys, you look to the headlines and they assign it to something. Markets rallying on coronavirus concerns abating. Markets failing, markets selling off because coronavirus concerns are rising. I mean, pay attention to the price action, man. All these headlines are going to chop you guys up. We want to make sure we're looking at what price is saying. Pete says, thanks. Have a great weekend. Hey, same to you, Pete, Mike, Gary, everyone in the room. Tiffany, great to see you back. Aurelia and DJ, thanks. It's great to see you guys all. Best of luck trading into the close of the week. We're pretty limited on event risk. You do get some data tomorrow just with the core PCE. The personal consumption expenditure here in the U.S. is the Fed's preferred gauge of inflation. So keep that on tap for tomorrow morning. Best of luck trading. Have an awesome weekend, guys. See you on Monday on the free session for Daily Effects and back here on Tuesday and Thursday. Cheers.